Here we are, third or fourth big snowstorm of the year, December 23rd. How are we doing out there in the YieldMax community? There's some sales on today. There are some sales on today. I just bought 10 more shares of MSTY. You know, it feels like a sale today, but will it be a sale tomorrow? That's the question, right? You never know. You can never time the market, but you can have time in the market. So just building up that fund. But yeah, back to our regular scheduled podcast. How's it going, YouTube? My name is Mike. This right here is Health and Wealth. Thanks for joining me today on another episode of the channel. So it's been an up, it's been a down week. We are getting towards the end of the week, which is hard to believe because it's Monday. But tomorrow being December the 24th, we have a shortened trading day. Then you have Christmas Boxing Day. And then that would mean that we have Friday for trading as well. So it's a short week. What does that mean for YieldMax? So there's no payment this week. Group A will throw out what they're going to be earning, and then you'll collect that next week. But yeah, it's a short week. So Merry Christmas, Happy Holidays, all of that good stuff. If you're new here, my name is Mike. I talk predominantly about YieldMax ETFs. I talk about a little bit about Bitcoin, and I discuss my investment journey on what I'm doing with these funds. Now, this isn't financial advice. I'm just some guy on YouTube with little to limited knowledge on the world. Should I say that? Should I say that? I don't know. What's that say? There we go. Well, anyways, today I've got a little hodgepodge amount of information here for you. I've put together some interesting clips. I think that you probably will enjoy it if you do hit the like button for me, so that more people like us get to see this type of video. So what I did is I kind of went through my three positions, and my three positions are in no order at all, but NVDA, CONY, and MSTY. And I took a look at all three of these, and I took a look at some of the charts involved with these as well. And I wanted to go over those with you. So a question that was asked in my comments of one of my previous videos was, what if a black swan incident happened and the market crashed? Would we still get paid distribution? So really, really good question. I don't think a lot of people really know the full answer to that question because we really haven't been through it too much with YieldMax funds. I think like the best answer you can come up with on that one would be whenever this happened before, the COVID event or a crash, did options trading still happen during that time? And I think it did. And when that happened, did people still gain premiums from those options trades? So yes, they did, right? Now, what happens to our share value? What happens to, CONY, MSTY, NVDA if this type of event happens? Well, a couple of things could happen to your share value. So the dollar amount, the price of the share of the ETF. So, this is just off the top of my head. Just these are like hypotheticals, could, ifs and whats, buts and nuts. So let's say the market crashed, right? Hypothetical, of course. And Coinbase dropped from 230 all the way down to $100. Worse than that, right? Let's say it goes down to $50. Just craziness happens. Well, what would happen to CONY? CONY would also go down in share price. What would maybe happen is that it would do a reverse split so that it could gain dollar value back up. And, YieldMax has said that they're no longer going to go back to the $20 share price. They're going to go up to 50. That could happen. And one thing that we have seen happen is they just delist the ETF completely. So if the underlying value diminishes so much or just disappears off the face of the planet, then they'll just delist the ETF that you have in front of you. Now, if that happens, you'll get your money back of what you have in there for that dollar amount whenever that does happen, right? But that's like worst case scenario. So are you still going to earn a distribution during that time? Yeah, probably, but it's not going to be enjoyable times for your money. That's for sure. So it is risky, especially in such a long standing bull market here. It's been months and months and months of just kind of going up. There has to be a bubble at some point that will pop. And, who knows how long that bubble will pop for. Just last week, the Fed Powell said that they're going to slow down on rate cuts, interest rate cuts. And, might be a good decision. I know up here in Canada, we've had a bunch of rate cuts, and our economy is not good. It's not good. You know what? I appreciate it. I like it for my mortgage, right? And the interest rate for that. I like it for my line of credit. That's good for that too. But it hasn't really done much to boost the economy up here to make it more affordable to live or anything like that. So slowing that interest rate could be a good thing for you in the US. Now, when the public heard that, the market kind of did tank a little bit. It had a dip there for the day, and then it went back up the next day. And, it's kind of just hovering around, what's it called? The Mendoza line here over the last couple of days. So, yeah, that could be the worst case scenario. But I mean, is it likely to happen? Maybe not likely, but again, it could happen for sure. So if you have your money invested in anything, you have to know your risks, and risk analysis is very important. For me, I don't have life-changing money in these ETFs personally. So if this happened to me, I would say, oh, whatever, right? Move on, try again, right? But for some people here, we have life-changing money in these funds, and I think it might be important for you to think of the what if, and have a little bit of cash on hand for that first, second, third, fourth, fifth dip. Have you guys ever been there before? I already bought the dip. So I've got a couple charts here in front of us that I think are pretty interesting. The first one I'm looking at here is on MarketBeat is the website. So I've got Coinbase and I have Coney. Now this isn't super updated because it doesn't necessarily have Coinbase's actual current price. What's the current price? 266 as of 2:50 p.m. Eastern on Monday here. It's a Monday. So it's this is that's pretty darn close, 268 here. So I mean, take a look at the charts, everybody. People always say, buy the underlying because it's going to outperform these YieldMax funds. I know for me, I'm into the YieldMax funds because of the monthly income that it provides me. And for me, my goal is just to keep building on that monthly income for that snowball effect in compounding distribution. So, I mean, the graphs look pretty similar. The peak of Coney here, Coinbase up top here, is quite a bit more dramatic than Coney's peak. And you can see we do definitely follow the downside there as well. And then again, another large peak. Now this was in October, midway through October, and us at Coney didn't really see that peak happen. But if we take a look at the distributions around October and November here, we definitely had a massive distribution, $2.02. Now, does that make up for that huge peak? Maybe not necessarily, but it is nice that we do get that monthly distribution from Coney, right? So Coney's doing pretty well here. If you're invested from day one, you've already been paid back all of the money that you originally invested. So if you put $10,000 into Coney day one, you've already received more than $10,000 back in distribution in a year and few months, which is pretty amazing stuff. Now, if we take a look at Coinbase, the stock itself, and we look at that over the last year, it is up $92 or 53%. Did you make that much on Coney with the distributions? Probably not, right? Probably not. But yeah, Coinbase follows Bitcoin quite a bit. I'm using Coinbase, the app itself, for my Bitcoin purchases. It's very convenient, super simple to use, easy to upload money into it. I've had no problems with it so far. So yeah, and if you don't know, if you're new here again, my strategy with Coney is I've bought all of the shares I'm going to buy with my own money, and I think it's like 183 shares, something like that. My goal was to allow it to purchase 10 shares a month, get it to enough money where it can drip, it can buy 10 shares a month on its own, and then build, build, build for the next 5 years. Don't touch it. I don't care if this thing goes to $0. I don't care if it goes to $10 billion. I'm not touching it for 5 years. So 2028 November is when I'm going to touch it. Maybe we'll see, but I mean, we'll see about if we want to touch it 5 years from now. But I did do an analysis. If past performance keeps going, then it would be a roughly $140,000 fund with me only putting $2,000 into it. So, you know, could be, right? Could not. So next up, let's talk about, let's get rid of that Coney stuff, the Coinbase stuff here. Let's talk about the next one on the list here. Everybody's favorite. This one is MSTY and MicroStrategy. You know, take a look at that chart there of the two of them. They do follow each other quite well. MicroStrategy currently on a downslide like we haven't seen in a while. I mean, its upside in the last few months has been astronomical. But I mean, if you look at the last month here, down 16%. But I mean, if we look at the last 6 months, up 145%. So Michael Saylor just keeps buying Bitcoin with the money that they generate from MicroStrategy here. We can go into it deeper in another video, but for this one, I just wanted to kind of share, you know, how it's doing. So the ETF itself here, MicroStrategy, is at 29.54 right now. I did buy 10 more shares today with my Nvidia distribution. Man, it's getting close to where I had originally set a target at. I said I'll buy it at 29.50, and then it went up. So I was like, wow, cancel that order. And then I bought I bought it at $30. So I mean, we're talking 10 shares times 50 cents, so no big deal, $5. But so funny, eh? Right? You always, I mean, for me, I like to set a price target and see if it hits it. But after I noticed the market was going up for a period of time, I said, well, that's not going to happen. I really want to own those 10 shares. So I canceled it and bought it at 30. And here we are, just a mere few hours later. But again, we'll go back to the chart. It's very, very similar. The chart itself, MicroStrategy is quite a bit higher. I'm going to cancel that. You know, trading at 337 at the moment. MSTY trading at 29.52. I do like people to I mean, this channel is not all about go, 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 go. I think exercising caution is important. So, you know, over the last 6 months, of 5% and 39% in the last year here. But, you know, that comment was talking about that black swan event. And I mean, look at this, right? Just 4 months ago, 3 months ago, the price was at $19.07. So that was in September. Let's take a look at the distributions in October. So $1.94 in August, $1.85, and then $4.19. Now, and then $4.42 in November. And YieldMax hasn't posted anything for December yet. But yeah, I mean, look at that. $4.19. Let's go look at that chart one more time. From there, September 9th. And then, wow, what a swing upwards, right? So this is very volatile. It can be very scary for people. If you bought at the top, you know, $44, you're probably not very, very happy right now with those share price at $29.53. But the distributions have been really, really great so far. I mean, they've only had 8 distributions so far, maybe 9 at this point. And if you purchased shares of MSTY on day one, you know, $10,000 worth, just a number, right? $10 cajillion worth. You would have had that paid back to you in distribution already, which is incredible. It's incredible. But past performance doesn't mean it's going to happen in the future. So if you're a MSTY holder, you really got to pay attention to MicroStrategy. What are they doing with their business? Do they keep buying Bitcoin? You know, here's another one. 2 hours ago, MicroStrategy adds 500. Hold on. 5,262 Bitcoin totaling. Oh my goodness. Is that four? I'm just going to read the numbers. 444,262 Bitcoin nears pivotal $92,000. Wow. Okay. That's incredible. So, Michael Saylor here just keeps buying Bitcoin. He said he'll buy Bitcoin forever at the top. Let's call MicroStrategy what it is. It's a Bitcoin buying company, right? So he is like the hardest Bitcoin buyer. He just loves it. He can't get enough of it. And so, yeah, as Bitcoin goes up, MicroStrategy goes up at this point. Let's talk about Bitcoin a little bit here. Bitcoin today is up and down like a yo-yo. Every time I refresh, it's hovering around that $93,000 mark. Now, I am a recent purchaser of Bitcoin. I've been in Bitcoin for 6 whole weeks. It's brand new to me. I think, yeah, it could be pretty good 10 years from now. So my purchasing strategy theory with Bitcoin is I'm going to be like Michael Saylor. Anytime I have money, buy it. And so, again, it's not life-changing money right now, but I hope maybe in 10 years from now it might be. And so for me, I'm just putting $100 every 2 weeks into it. So far, I'm down. I think my average price is like $95,000, right? And so I'm down a little bit, but I don't care because it's $300. Now, if I had to put 20,000 into this, then I would be freaking out a little bit maybe. But Tommy Lee on a CNBC interview said he could see Bitcoin being well over 100,000 going into 2025. But then he also sees it going all the way up to $240,000 in 2025. But on top of that, he also sees it going down to 75,000 before that happens. So, who knows if he's going to be right? We'll see if he's right. We got nothing but the future ahead of us, and it's fun to watch, right? Bitcoin for me is just something that's kind of fun to get into, and I always think like the what if, what could be, that sort of thing. So I got a video for you at the end that I think you're going to enjoy watching. It's from a couple of weeks ago, but it is in relation to that price. So there you go. There's your MicroStrategy Misty conversation. Again, Misty here with the incredible distributions. I did buy 10 more shares today, so I'm excited for the future of Misty. I'm going to keep growing that for the next foreseeable future. My goal was to get to 6 pillars that paid me $500 each. So far, Nvidia is basically there almost every single month, which is good. Next, I want to share with you my passive account so you can see the distributions I've received so far from these funds. Passive is a tool where you can view your distributions. You can set targets, goals for yourself. I have a $25,000 goal set on here. And it kind of motivates you to see where you're at, where you've come from, where you're going. It's pretty awesome that way. I'm going to post this in my link down below in the first pinned comment. If you sign up for it, I think it costs $99 for the premium version for the full year, so less than $10 a month, which is cool. Just so you know, I get $20 if you do sign up with my link. Now, if you're with Questrade, you get it for free. So use my link if you're with Questrade. It's pretty awesome. So here is my passive account. And what I'm sharing with you is all of the distributions I've received this year. I think I have it. Yeah, 1 year up top. So not just this year, but 1 year. And you can see the graph is slightly getting higher and higher as we go here, as I continue to put that money back into each of the ETFs. So start at the bottom of that list there. This month, December, $487 from Misty. All of this is post-tax. I've already been taxed at this point. Coney, $160. I don't care about Coney. Coney will just sit there and grow itself for the next 5 years, right? Fingers crossed, everything works out. But I'll still talk about it, but I'm not going to touch it. I'm not adding any more money to it. It's all the money that gets added to it is from itself, from distributions. For the next 60 months, right? So 60 months, if it keeps doing what it's doing right now, we're talking like that's $60 in distributions re-added to it. buying into itself, buying more shares. So hopefully by the end of that 5 years, we're looking good. But back to that black swan amount or event. If this thing tanks and it has to do a reverse split, gross. I'm not pumped about that. But again, I'm setting it and I'm forgetting it. Next up is Nvidia, and that's the one I want to talk about with you last year. I've got $577 a month this month from Nvidia, which has been really good. Remember my goals, if you've been with me for a while, is to get 6 pillars that are paying me $500 a month. So essentially, we've got two here. We've got Nvidia and MSTY, which is really great. I want to make sure they are cemented there every single month. They're paying at least $500. So I want to add a few more shares to both of those just to be sure. But I am going to add a lot more to MSTY as we go, because I feel like so far MSTY has just been so incredible that I would be, I think, silly not to add more to it. So yeah, we'll keep it rolling here. Keep that rolling for sure. So that's my passive account. I love the graph down below. It tells me how much each one has paid me in 1 year. You can customize the dates here. But Nvidia's paid me $4,656 this year. MSTY's catching up to it with 2438. Tesla was this is 1 year, right? So Tesla, I had it till March, so 1,348, and then there's that Coney, which I hope one day just surpasses everything. Maybe a year or 2 years from now, it just takes care of business and flies by everybody else. So let's talk about the last one on the graph here. This is going to be a comparison between Nvidia and NVDA. You can see they're very, very similar on this graph here. Not a drastic change between the two of them, but Nvidia stock here today is having a really great day, up 3% or $4.60. I was taking a look at some of the news down below here. Nvidia stock appears undervalued. Is it the right time to invest? I'm not an advisor at all. I do know in the earnings they said they're planning on having a quarter or two of slower than usual growth, but like Nvidia is just an incredible company. There's a reason they're way up there. Number one or number two on the market when it comes to value. Like, they are just incredible. There's some of their stuff that came out in October. $35 billion in revenue, income $19 billion, net profit margin 55%. So pretty darn good, that's for sure. So Nvidia, and then you have Nvidia, which has just been one of the best. It's going to be a top 2 over at YieldMax ETF so far. It has fully paid back anybody who initially invested into it, plus a lot more so far. The share price, if we take a look at over the last, since it's come out here, it's up 19% from day one. Now, you can see we've had some massive peaks in this thing. There's the Batman up there. March of this year, $30. And yeah, twice got to the same number essentially. And then again in June here. March is when I bought it, right? So my average cost on Nvidia is $28. And so how am I going to bring that down? I am still buying a few shares of it. I ended up selling a few shares because of their talk of it being slower than usual profit margins. I sold a few shares to buy all of those Coney shares. So I'm going to get that back up to 400 shares coming up here. And, slowly but surely. Don't call me Shirley. Let's take a look at Nvidia, sorry, on YieldMax's website. Now, YieldMax is just super slacking on their website these days. They must have fired the website guy. So if you're a website guy, apply at YieldMax. They need you. But I mean, they're just kind of the same thing as Coney, right? Paying out just over $1 in the last 6 months here. And then down below here, paying out quite a bit more. That's when I kind of jumped in there, was around March. So those were huge months for me. Let's go take a look at that. They're highlighted here in the yellow. So yeah, April 665, 306, and 626, 817. These were huge months for me. That really helped propel my fund here. So that's going to be Nvidia. One thing I do worry about is this thing right here. Now, I live in Canada. I have to pay something called a withholding tax because I use a tax-free savings account. And that's 15% of all money that I bring in through distribution. So if the distribution gets too low, then it doesn't make economical sense for me to own that ETF. So if this thing gets much lower, I'm going to end up not making a lot of money because I do have to pay up 15% of every distribution that comes to me. So that is one thing I'm worried about on that sense. But you know, it's been very good to me. I'm a big fan. I think this price could go up, and it should go up, right? They're a moat. People want their chips. Apple, Microsoft, the big boys, they want their chips. And so problem with Nvidia is they can't keep up to that demand. So as they continue to produce, they're going to continue to make that money. That's for sure. So I want to go ahead and play this video for us. Let's go do that, and then we'll talk at the end, okay?
Advisors, head of research, Tom Lee, joins us on set today. Hi, Tom.
Hello.
So based on what Taneo was describing with regard to Bitcoin, what do you think that this most recent rally says about the overall risk appetite in the market right now?
Well, it's really telling us investors are pro-risk. I do think it also just signals how much capital has been idle for the last couple of years, either parked in money market cash or waiting to see if the economy survived. So I think Bitcoin rising is to me, breaking out of a holding pattern is a precursor to what the S&P is going to do the rest of the year.
Speaking of the moves in the broader markets, you say the road to 6,300 is paved with bumps. What do you expect investors to see ahead that may slow them down? What are some of the key markers that you're looking for?
Well, I think there's a lot of macro to digest the next 3 weeks. You know, tomorrow is the jobs report, and I think investors are fearful that it's going to be too strong because of the hurricane and seasonal adjustment, so it's going to be a big number. Next week is CPI, which has been running a little hot, and Fed Chair Powell spoke about that earlier this week. And then, of course, on the 18th is the FOMC rate decision. So I think once we're through these events, investors can actually then invest into sort of that Christmas Santa Claus rally. So I think 6,300 is still very doable.
So you're basically saying don't go away after the 18th because there may be some additional upside toward the end of the year?
Yes, or buy the dips, yeah.
So, I mean, you suggest there that we're in a good news is bad news for stocks environment. I mean, why should the market be concerned if the Fed is going to be less aggressive in terms of cutting rates?
I think there's a conceptual change that the market has to get used to, which is, let's say earlier this year when the Fed started cutting, people thought, well, 5 cuts is good for stocks in 2025. So if the number gets reduced, it's bearish. I think as we get into 2025, the market's going to shift to thinking the fewest cuts possible next year is the best case because it elongates the dovish cycle. So I think we have to flip the script, but it's going to take some time.
But hasn't that been the case all year? I mean, because in January of this year, the market was implying 6 or 7 cuts. We're only getting a few. We've slowed the pace. The 2-year yield is not that far below Fed funds anymore. So I guess my point is the market's already kind of registered that slower is better.
That's right. I think it's, I would just say it's not a consensus accepted view because, for instance, when Fed Chair Powell spoke about taking things a little slower, the market got weak and then maybe had a rethink. So I think it's going to take a while until markets realize 1 cut next year is actually quite bullish.
Are you surprised that equities haven't reacted to some of the political turmoil abroad, South Korea, France, elsewhere?
In some ways, I think the stock market had been already pricing this in because, as you know, this year has been a pretty significant divergence between U.S. versus Europe and U.S. versus emerging markets, and even China's sort of failed rally. So I think in some ways the market's not surprised. Maybe it was even pricing in this through currencies and equity prices.
Tom, I'm going to go back a long ways to our long relationship. Do you still even track active managers and how much, you know, they're trailing their bogeys at all, and whether that's a factor in any way at the end of the year?
Yeah, in fact, we've been cleaning up that data because, you know, as you know, in the last 10 years, there's been a big change in the number of managers. It's good. It's kind of a good and bad year because active managers that tactically went cyclical or more offensive or tech have been having banner years. I mean, we have so many clients that are beating their benchmark by 6, 7, 8. These are unheard of outperformance, but it's a small number because, as you know, when you look at the world more towards macro or market neutral, it's been very tough.
Banner year is one of the things I just took from that. Banner year. Is that true? Have you guys had a banner year? Talk to me about the percentage your account has gained or decreased. I think I'm up 36%. I just looked the other day. 36%, that's pretty darn good for a small-time investor like myself. And you guys have seen what I've been investing in. It was Tesla at the start of the year, then Nvidia, then MSTY, now Coney. So up 36% this year. So far, with only a couple of days left in the year. Can we make that happen again next year? Only time will tell. My name is Mike. This channel's name is Health and Wealth. Thanks for being a loyal subscriber, and I wish you a Merry Christmas, and I hope to talk to you again before then. Bye for now.